Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over just the status of Bitcoin as it blazes off of my golden parabola. Guys, our long is still pushing up into new all-time highs. We are approximately at 40% off of the entry that I gave you probably about 2 months ago now, when we were preparing to use that golden parabola as a potential launch pad, and it has paid off in spades. Of course, we are just traveling up the 21 daily EMA, which does show that the trend is in quite a healthy status, and in fact we won't really break down from under that unless we lose 105. Okay, well, under 105,000, then we can consider that maybe we're entering into some potential squeeze to the downside, maybe going to fill in this area towards that golden parabola, and then we'll play it by ear as we approach that boundary. However, we can also take a look at other metrics here, and we can see, of course, that our falling wedge pattern has completely played out. So if this market just wants to take some consolidation time at the measured move, that often happens, and it would be quite reasonable to either have a pullback or just go sideways, or a little bit of a chop and grind around those measured moves. Anyway, that measured move is exhausted, and we can no longer say that we're really following this falling wedge here. Guys, I think that we can just go ahead and put that one behind us. And currently, we are developing some sort of rising wedge, which is a bearish pattern. And we also have some spider lines off of our top, off of our double top just recently, which it does create a third top right where we're at right now. And if we are able to push through that, this rising wedge does suggest that we might bump our head at approximately 115, which maybe we get some overthrow, maybe we don't. But these type of rising wedges, they do have a 70% chance of breaking down. So, you know, there's always some shenanigans at the end of patterns. It's very typical. And if we do have an overthrow or just one last pump before that breakdown, before that consolidation phase, again, I wouldn't be too surprised. On higher time frames, we are, you know, basically broken out already above the candle closures on the weekly and the 2-week. So this area, if it holds, it's going to look quite bullish. If we just go sideways or chop sideways and up, there's really nothing bearish to say whatsoever. And as long as we're in this uptrend, as long as we're above that 21 daily EMA, everything looks really good. We have a natural range all the way up to 115. Like, what else could you want? Obviously, if we lose the bottom of this rising wedge, and it's a very skinny rising wedge, but if we do lose the bottom of it, maybe we have a measured move down to that 105, maybe 100K area. And then, of course, again, we'll just have to look to see what type of a bottoming pattern do we put in, unless it ends up being impulsive off of maybe some terrible news in the market. Who knows? Maybe the Europe tariffs are back on and the market just doesn't want to swallow that, right? That could create some type of bigger rising wedge pattern here. That maybe ultimately wants to break down quite hard. Now, currently, I'm not expecting that. I would look for some type of bullish bounce off of these previous all-time highs on the weekly and the 2-week, and see if we can get that bullish kind of bull flag look that maybe could project us up to our next all-time highs impulsively. But, you know, we do have to be aware of these possibilities, and if we ever do breach these lower 70s, that would set up that double top, which could in fact take us down to the lower 50s, maybe even the 40s, and that would be quite dangerous. And that would probably just be the end of the market, starting a new cycle all over again, and we just have to, you know, hold our breath patiently while everything gets completely reset. So again, guys, like when you're at this type of resistance, whether it's diagonal or it's horizontal, it's always wise to skim a little profit. Then you can kind of figure out what the market is doing. Is it going to make a lower high and break down? Is it going to make a higher low and break to the upside? We'll be watching for that. But currently, everything is looking pretty peachy. Okay, just understand we are at diagonal resistance. Even though we did bust through the horizontal resistance, we are now at diagonal resistance there. Kind of to supplement that just a bit, we do have this bearish harmonic pattern, this bearish shark formation, which does have a realistic target of approximately that $93,000 area. Okay, so in the past, $93,000 has been quite supportive. If we do have just a minor pullback into that area, back into the golden parabola, I think that's going to look pretty good. Some people will call this an inverted head and shoulders. Again, we're going to have that measured move to the upside. That would also complete the flag area off of a new flag, bull flag there. And so there would be a lot of patterns going in our favor if something like that was formed. However, in general, it is better to stay above your previous all-time high. So, again, if we could just grind and hold above 105, that'd be best. All right. Now, we do have a deeper harmonic target. These ones don't always get hit, but it does bring us all the way back to the entry of our long, right? That'd be quite a terrible thing just to erase that entire move. And that would break down most likely underneath this golden parabola, where we might back test bearishly. And then, of course, that other scenario that I was talking about could become validated should we breach the neckline and back test bearishly. Again, I'm not looking forward to that. Just something that we keep in our mind because we're not idiots. And we always want to remember that charts can go up and they can also come down, right? They don't just go in the direction that you want them to go in. So, these are just hints at possible areas where the market may be looking at, should it get its way, should the bears get their way, that is. Let's go ahead and just take a look at, maybe some of these metrics, actually. I think it's time to perhaps just pop on some of our indicators. Here we can see that the Heikin Ashi is actually looking fairly robust. If I do just zoom in here, my Heikin Ashis are just creating stair steps, which is exactly how you want them to look. They're going to look a little bit better above 110. Above 110, this is going to look like it wants to take its next step up. Guys, we also have my bumper bands here, and you can see we're just in the middle of the bumper bands. So a little pop up to our previous high of approximately 112, or a little dip down to that 21 EMA of 105.5. Both of these areas are equally within range. Very typical for our current price action. And so I would say no need to get freaked out unless we're under 105, and no reason to get too excited unless we're above maybe 112, 200 or so. Okay, then maybe something is changing, but otherwise this is just very typical price action here. If we do look for some divergences, I can't really see anything too significant, but we are perhaps getting just a little bit of hidden bullish divergence. So maybe in an uptrend above that 21 EMA with some hidden bullish divergence, bulls may have a slight advantage, but again, in the typical range of price action here, we're basically in the middle. And so we can just consider this to be just a very short time frame consolidation, lower highs, higher lows. Really, it's just a little indecision wedge. And sooner or later, we will either break out to the upside or break down. And, that could probably happen this week. Now, this week, we are having the Bitcoin conference. Typically, that's bad for the market. Typically, we get pullbacks, sometimes very significant pullbacks off of that conference. So I've always called it a curse around our necks, right? Like, we never want the Bitcoin conferences to happen because typically it's bad news. I guess it's just one of those kind of sell the event type events. And, usually the sellers start to step up and find their way to push down the charts. So if we do have some pullbacks, maybe don't get freaked out. Usually the market can recover off of those Bitcoin conferences, just a news-driven thing. But, those things kind of do have peak euphoria sometime. And with all the Trumps and, the US president, injecting themselves in this kind of conference, it's hard to get better news than that. And so if you are going to have a sell-off, usually sell-offs do come on good news. Why? Because markets want to get the best price. So they're not going to sell off into bad news. They're going to sell off into good news because that's the best price, right? They want to buy on bad news because that's the best price for buying, right? So again, guys, sometimes people, just use the kind of quote unquote dumb money way of thinking, where they think positive events are going to pump the market and bad events are going to dump the market. But the smart money sometimes comes in and, they just have a lot of money, right? And they just do the opposite of what you would expect, okay? When everyone else is fearful, they're buying. When everyone else is bullish, they're selling, all right? Let's see here. We can go ahead and take a look at some of my signals. It just looks like we had our, addition, add a little purchase up here. We don't really have any sell signal off of my MACD div. Let's see if my squeeze here, on the squeeze, you can't see that we did get that squeeze off of the long that we took, and that we have been embedded at the top of of my squeeze channels here, okay? And so we've just been embedded up here, just bumping and grinding the top of that off of some bullish EMAs, and really, as we can stay there for quite a while. The thing that you want to note is that having been up here and kind of embedding ourselves up there, if we do break down, we have quite a bit of distance to go until this lower area, which is coming in around that 92 to 93 area. So some of these projections off of the harmonics, they could make a lot of sense. And here you can see an example. All right, it was just embedded at the top of my squeeze channels, and then you can see once we finally got that breakdown, look exactly where it broke down to, the bottom of my squeeze channels, and then we had to carve out a bottom before making our way to the other side. So again, I can't really take 92, 93K off the table. Unfortunately, that is our natural range should we get a breakdown, and we definitely have the bandwidth to drop that hard. Now, the good thing is that my squeeze channels are suggesting it's not likely that we're going to drop harder than that, okay? Unless there's some type of capitulation in the market, it's very unlikely that we're going to see lower than that 92, which again does suggest that golden parabola is going to continue to hold up for us, which is a good thing to see. So just moving forward here, let's go ahead and take a look at the momentum channels. And my momentum channels here, actually, let's keep that squeeze on, see how they play together here. Yeah, we are in that bumper zone, and the bullish control zone is going to be lost here on the daily underneath approximately 108, but we're still going to stay neutral above approximately 104. So that suggests that, a little bit of a dip, right? A little bit of a flash into 104, really that 105 region that we're talking about is still intact because the bulls are still going to have net control above 104,000. And, if you need to give yourself a little bit of buffer room, then maybe that 105.5 to 104,000. But then under 104,000, you're going to want to think quite seriously about a natural drop down to potentially 96, and then again in that kind of upper 80s, lower 90s area where we might find some support. Okay, so that's what I'm looking for in terms of our bandwidth on pullbacks on a momentum basis. However, we can also just take a look at what the MACD is suggesting, and it's suggesting that we are going to have a negative bias on the day as long as we're under basically 111, okay? So maybe we don't really need to take out that 112, but just this wick right here, anything above that wick would flip our MACD momentum for you MACD traders back to positive on the daily. And that'd be a good thing because then our EMAs and our MACD would be realigned. So if you are just a little bit more of a conservative trader, then you'd be looking above that 111 area before you'd be thinking about taking another long, perhaps looking for what type of a setup you can get there, even though we do have that bullish divergence suggesting that we could pop up. A hidden bullish divergence doesn't necessarily say that you can break your range, right? It does suggest, however, that you can come back perhaps to the middle of that range, maybe even to the top of the range. But it doesn't really suggest continuation necessarily. But in a bull trend, it is a nice thing to see. Let's go ahead and take a look at the fader's money glitch. Yeah, I mean, unfortunately, the way that I programmed this one, it seems to only work on Bitcoin. I don't know why it gets all choppy and weird on altcoins, probably something to do with the look back. But on Bitcoin, it has been giving me very clear signals. And yeah, this signal just continues to run bullishly. So I'm going to continue to work on this indicator, but it looks very similar, right, to the run that we had over here. And of course, just because we have those rising wedges, this was also kind of a rising wedge, right? 70% chance of breaking down, but what happened is that it flipped to the upside and it just went parabolic. So, as long as this bull trend is intact, even though we have this kind of rising channel, this rising wedge, if we do break above that 115 area, yeah, I mean, we could go on a parabolic ride and maybe we just get all this teal color, right, all over again. And so it's looking pretty good from the money glitch perspective over here. And of course, if that does start to turn gray or if it starts to turn orange, then I'll let you know. But currently, just everything is looking pretty gravy. Similarly, I have a different calculation on my Ichiban, and the Ichiban is a little bit, slightly more nervous, slightly more protective, but also a very good indication of trend. And it's just bright green. Okay, now we are getting our first hint, right? Just our first little baby hint of a purple candle right here. So, the Ichiban really wants to see us overthrow this green, this teal EMA in the center here, somewhere around 109. And this is a little bit more of a front-running tool. So, I've given you the conservative perspective, and then on a front-running basis, just anything above, again, 110, right? A 110, let's just call it, would be looking pretty good on a candle closing basis. Okay. Now we also have my Nibbon, which can show some squeezes, and I'm not seeing a bearish squeeze here. Okay. Everything seems to be quite supportive. This looks like consolidation, very similar to here. We don't have any new type of squeezes going on. So nothing really to write home about. The Nibbon is really just very supportive right now. Again, we have that same buffer room that we do have on our EMAs. So I like that confluence. And until we lose that 105 area, it just looks gravy, guys. Okay, I think that's basically what we can say. If we do want to look at our higher term EMAs, you can see that the 2-week 21 EMA is all the way down here at 88. It'll probably rise just a little bit at the close of this week. Let's see here. When does the 2-week close? No, in 11 days. So it is going to hang tough there. So really, it's going to be in that 89K area. And then this 9 EMA is going to be, probably pulling up into that 100K region. So on a 2-week closing basis, anything above 100K is looking very good, even if we do have a shallow pullback. And then anything above essentially 89 to 90K, it's still pretty good. You're just going to have to watch out to make sure that you don't have any high time frame squeezes forming. you know, we'd have to go back quite a ways to see something like that. But it could look like something like this, right? Where we're throwing up right here. We have a pullback, you know, as long as we're above that 9 2-week, no problem whatsoever. We fall in between the 9 and the 21 on the 2-week. And then you can get this kind of squeeze formation as the 9 starts coming down pretty harshly. And as you know, that led to the end of the market. So I would say, you know, this is my big warning zone, right? Between that, you know, kind of 100K to 88K. We just don't want to be putting in a lot of daily candles that start holding a floor but having lower highs. That's going to be a death squeeze to this market. And these are 2-week EMAs that I have plotted here, even though I'm on the daily chart. I'm using my high time frame EMAs. And guys, yeah, so just to be super aware of that region should we have pullbacks. But right now, you know, as long as we're up here, we could literally be impulsive to the upside at any moment, just as easily as we could have a pullback. So we're just going to play it by ear. Again, you know, those high time frame closures, they have a lot of days to go on a 2-week basis. You know, it's really that 105 on a weekly basis. You know, it's 1043. So the measurements that we got, where everything is just looking super good, you know, above 105, you know, and down to 104 is absolutely correct on a structural basis. Start getting some warnings underneath, you know, 100K-ish, right? And then, of course, you know, we could come down to 92K, and we do have a supportive area there. We just have to make sure that we don't get embedded in that zone with lowering daily candles, right? Even if we're holding our floor, that could impulsively drop us to the downside. All right, guys, that's your alpha for the day. Stay safe and happy trading.